appreciate you guys being patient in our smaller room. We're just acclimating him already.
Yeah, that's right.
Actually, he helps, he's a move manager, and he helps people move and pack up and do that kind of stuff. So he's your guy. He has a whole company that does that. So he's gonna speak next week, actually. Maybe if we can get this to work. Oh, did I see somebody? I think I saw Julie out there, but she went around, I think, the.
Oh, yeah. Okay.
So you give me that one?
Yeah. We only need to hear half of what, but this one doesn't work at all. Let me try that. You know, for the longest time in the other room, it's a big room and we had no microphone. And so then we have a microphone, now I'm kind of used to a microphone. You know, it's hard to go back and forth. So thank you all for coming. I appreciate it. I see some new faces, which I love. It's always fun to kind of start, you know, bringing our friends and introducing people to some of this information. And I had another thought. So next month we will be in one of the rooms over there, and then after that, in August, we'll be back as far as having tons of rooms. So then you can bring all of your friends. The other thing I wanted to say is that I will have more information on this next month, but there have been a lot of people who say I can't come on Wednesday. In September and in October, we're going to have an additional Senior Truth Series, and it's going to be in Lenexa at the Old Town Lenexa Community Center. Are any of you familiar with that? It's just off of Santa Fe, and they rebuilt that entire building, and it's very, very nice inside. So we're going to have one on September 9th, which is a Tuesday, and again, I will provide you information. I'll send you emails, and then also October 30th will be another one, and that's a Thursday. So we're kind of testing out that location, and so that could be something that we look into for next year. All right, well, I think there's one more person coming, but today we have a special treat for you. We've kind of built up to this a little bit. So if you remember, in May, we talked about finances. So kind of getting your finances in order. We had Free State advisors talking about advising. We had somebody talking about estate planning. We also had somebody that works on, you know, after, why can't I think which estate planning, special estate, elder law. And so it's just kind of getting all your resources in order, right? And then last month, we talked about you want to stay in place, which most people do, right? We want to stay in our homes. That's our goal. We want to live there successfully. Sometimes we need help. That's what last month's seminar was about. And now we're kind of up to, okay, maybe I need to pay for somebody to come in and help me, or maybe I need a little help with the people who are coming in to help me. And so this month we're bringing in a couple people who are going to introduce themselves here in just a moment, but they're here to talk about how can you stay in your home longer financially, and then also ways that we can take, well, she'll explain it, but ways that you can have someone in your corner coordinating some of these people, especially maybe if you're here by yourself, or you're here and your parents are somewhere else, or your parents are here and you're you know, sometimes we're not always with people that can help us. So anyway, I think you're going to find this very interesting, either for yourself, or like always, it could be for somebody else that you knew, because that you know, because that's really a lot of it. You guys are the ones, we're always preaching to the choir here, but you guys are a great wealth of information, and I'm sure a resource to so many other people. So let's start off. Lee, do you want to introduce yourself? This might be our best bet. We'll try that one.
We can see on this one.
Okay.
I've never been accused of needing a microphone.
Okay, well, if you don't want to use it.
All right. My name's Lee Smith, and I am a loan officer with Fairway Independent Mortgage Corporation, and I kind of specialize in essentially the best way to maybe use your home equity as part of your retirement plan. That's probably the simplest way to put it.
I'll try and keep it that quick, but
You don't have to.
I've also never been accused of being quiet or short. Yeah. Good morning.
My name is Christina Wilkins. I am the COO of Advocates for Seniors. We are a paralegal firm and we specialize in advocacy for seniors. And what that means is we act as agents under powers of attorney for both healthcare and finance, trustees, executors, guardians, and conservators. So basically we are a professional family. So in absence of family, or if you have kiddos that live, let's say in Texas, and you need someone to help you boots on the ground, go to doctor's appointments, pay bills, you can hire us to be your professional family.
Okay. So one thing I forgot to mention at the beginning here is that we're here, our main goal is to educate, to offer resources for you. We do all own a business and are part of a business, so we will talk about that as far as, here's our business, but we're not here to sell you something. I always tease that, we're not gonna get a Hereford house meal or anything like that, but if you need our services, we're here. And in addition to that, I also have amazing education partners that are also incredible resources, that also have the same kind of heart, where they're here to be a resource for you, they're not here to sell you. I don't have our screen up today, but we have, Free State Advisors, they're here. We also have someone from Connect Home Management if you need anything done at your home. Lee's one of our education partners, Santa Marta, Senior Helpers, Garden Villas. So it's summer and people have a lot of stuff going on. So you're gonna see we're missing a few of our people. So, well, let's go ahead and get started. And I'm the real estate part. So if you need someone to help you with selling your home, Lee's gonna help you home. Not to sell your home, but that's okay. Okay, Lee, you're out of here. I'm taking over.
First time I've asked him, to leave early, so.
Might not be the
I was
last.
gonna say,
Okay, let's just talk a little bit about, you've decided to stay, your finances in order, but you have a home, right? And my goal is to help you either stay in your home, or if you're ready to move, to help that be an option for you and to help you do that. But sometimes you just have your home sitting there and it's a resource that you could be using, but maybe you're not using it to the best of your ability. And Lee's gonna tell us, you have a good way of explaining there's different ways that we can do that, or why you might want to use our home. We're just gonna jump right in. Is that okay?
Yeah, there's essentially the biggest question the first question I ask everybody when we're starting to look at the home is, do you stay or do you go? Does it make sense to stay in your house or does it not? And a lot of times I'm asking, I grew up in Southwest Missouri, y'all love stairs up here. Like, I've never seen so many stairs in my life until we bought a house years ago in Lee Summit and lived there for, a few years. There were stairs to get everywhere, from the garage, up a set of stairs, there's a kitchen, then up another set of stairs, then there's the bedroom, and it's very interesting when I start talking to clients, and if they say they have that type of setup, what California Split or whatever other names that real estate agents have for it, is it a lot of times doesn't make sense, because if something happens, you then become a prisoner on a level of your home. And your spouse typically can't lift you up or down that set of stairs. Very rarely. So if you have to go down different sets to get to the garage and up to the bedrooms. So that's always the first question, is does the house make sense? And a lot of times I ask the question, if 3 to 5 years from now nothing changes, everything stays exactly the same, do you still see yourself in this house? And if the answer is yes, to that, then great, let's explore the house. Because if you stay put, you essentially have 3 ways to access equity within your house. You can use a regular, what we call cash out refinance. You can do a home equity line of credit, or you can use the FHA-backed reverse mortgage or home equity conversion mortgage to access that equity. Each option has different pros and cons to it on how you can do it and what it means really over for your cash flow in your retirement. But all 3 are very viable options depending on what your goals are. And it's the same thing, if you decide, hey, I need to move and do something that is more accessible, you essentially have 3 ways to buy a house. I try to make it simple. Everyone likes 3 options, right? You get more than 3 options, your head starts to spin. But when you're looking to buy a house, you could pay cash. You could get a regular mortgage on it. Traditional mortgage, I call it forward mortgage, or you can utilize a reverse mortgage when buying a house. Just 3 options. Either way you go. Not one is right or wrong. It's just what fits you and what the next 3 to 5 to 10 years is going to look like.
Okay, that's
pretty simple, right? Like those are the different options. And we're gonna talk just a little bit more about those. And if you think of some questions, kind of write those down, because we're gonna have plenty of time to answer questions at the end or even in the middle. So this is a little bit still kind of an intro as far as what Lee does and those different options. And then what Christina does we have a kind of a pre-call, is that she kind of is this, what did you call yourself? A
Project manager.
project manager. And so how do you see, what is your role when somebody's trying to decide to stay, or if they're deciding to go, or if think they might, need some of the equity out of their house? What is that? What do you see some examples of that happen?
Yeah, absolutely. So we kind of look at just the overall picture, right? So when I say a project manager, we're looking at everything. Number one, to kind of piggyback off of what Lee said, is safety, right? So when you're looking at stairs, when you're looking at your laundry's in the basement and it is a death trap going down those stairs, there's not a lot of ways that, in the older homes, mine, I mean, you can do, stair, what are they called? Yeah, lifts and things like that. I mean, there are options, right? So one of the things that we can do is sit down with you, and you don't have to hire us permanently as your agents or your powers of attorney. I also a lot of times just get calls from people that just need me for an hour, or they need me for a couple of sessions to sit down and really just be that advocate, be that expert. I'm a medical social worker. I've been doing this for about 18 years. A lot of my experience is in senior living, so kind of on the flip side, right? So I have experience in both working with people in home, but then also in senior living and everywhere in between, really. And so really it is, when we say we're an advocate, we're really advocating for what you want and what makes sense. But number one is always safety. I'm always gonna err on the side of caution when it comes to what is going to be the safest. As Lee had said, if nothing changes in 3 to 4 years, then how can we utilize your current assets to fund you staying at home? But if it doesn't make sense for you safety-wise, because let's say you do have a progressive disease where unfortunately your health is going to decline, you kind of have to look at that, right? And maybe it doesn't make sense. The estate planning workbook that is in the back, feel free to take it. It's a really good guide where you can just kind of jot down your assets. And part of that is looking at what can I utilize to help stay in my home or help pay for private duty home care. As a project manager, then we can kind of look at that and say, okay, here's basically the pros and cons. Sit down, have a consult, and discuss, who are your people in your life? Do you have people that can assist you for meals or things like that? So we're really looking holistically at safety, number one, your financial resources, and your support system. Because I think those are really the key pieces of can you be successful at it.
So I think what's great about Christina is she's another resource that can give you resources. You're really giving out resources for different things. You're not gonna come home, you're not gonna come in and do an assessment and then take care of that assessment. You're just there to kind of be that, almost kind of be that caregiver or that child, or the
professional family.
Professional family, that's the word I like, professional family. And the reason I wanted to bring her on too is because it's one of those things where it's a little bit different because they cover a lot of different areas. So they can refer you out to a financial advisor. And then at that seminar, we didn't have somebody talk about taxes, but you do a smidge of taxes, right? So there are people where you just need a pretty easy tax return. So there are people out there for that as well. But let's go into, if you decided you wanted to use some of that equity in your home. One of the things, there are a lot of misconceptions, I think, about the reverse mortgage. We've heard some negative things about that. And so I just wanted Lee to kind of debunk some of those. I have a client right now that we're using it to actually, they needed a different house. They needed a house. No, I think they're too close.
It's working fine. You just happen to move it.
With my mouth?
Yes.
So they're using it because they wanted to be in a house that was a ranch. You know, they wanted all the bedrooms on the main level, and they wanted to build something. So they were able to, instead of creating a new mortgage, they were able to get a reverse mortgage and be able to use that equity instead of creating more payments for themselves. So I'm kind of butchering it. So Lee's very good at explaining some of that. So I just want to give you this option as an option, because a lot of people are not aware of that.
Yeah, I mean, I think with anything, any type of product or financial product, it can be used correctly and it can be misused. I think it's pretty fair to say. And I think all of our industries, when you worked in it, earlier in life or even now, has bad actors. I think it's pretty fair to say. I mean, just because you have a bad experience, let's say in automotive repair, doesn't mean you're never going to take your car back to another shop, right? So, and the one thing that you'll learn with FHA, especially backing this product, it's fully backed by the Federal Housing Administration, and I kill a small forest every time I print a packet, and I wish I was making that up. I almost use a ream of paper. That's how much disclosures. And there is so much oversight with this product. I'll just give you an idea. There was somebody who ran a pretty elaborate scheme up in the Chicago area. It was really tailored out. Like, it was a lot of thought in it and everything else. That person just got 17 years in prison for it. And federal prison, which means, if anybody knows federal time, you spend 85% of the time in a federal penitentiary. So it is, as I joke, FHA doesn't play around, right? FHA is on top of it to make sure, because, okay, yeah, if you can't hear me, then we'll go that route. But so FHA backs and supports and insures the product, and they're a huge watchdog and oversight to it. There are guidelines and restrictions, and oh my goodness, I tell everybody all the time, the best thing about this product is it's backed by FHA, and then the worst thing about this product is it's backed by FHA. So anytime you're dealing with the federal government, but what it essentially allows someone to do over the age of 62 is access the equity in a safe, secure way to where it does not add any risk to you as the borrower or the homeowner, or however you want to look at it. And by risk, I mean this, is that if you have a paid off house, what are the things you're already going to do? Pay your property taxes, right? Kind of have to do that. The county doesn't like it if you don't do that, right? Pay your homeowner's insurance. Pretty fair. If you don't have homeowner's insurance, please have it, because I run into a lot of people that have a paid off house and decide, hey, let's not have homeowner's insurance. Terrible idea. And then pay any HOA dues or maintenance dues if you live in a community, and the house just needs to be your primary residence. And that's kind of a loose definition. If you do those four things, you're able to stay in that house so you can no longer permanently occupy it, or until you turn 150, whichever happens first. And I will know like tomorrow the client will close, I will know their 150th birthday. It'll be in writing. So I tell them that I'll be definitely retired. If not, my wife will kill me off way before that. So, but the key is that you're gonna do those things regardless. That's all that's required with reverse mortgage, same thing with a paid off house, or even if you have a mortgage or whatnot. This just allows you to use the money with no monthly principal and interest payment. So it comes back to, as we were discussing earlier, what fits. If you plan to be in that house a very short term, this is not a good option for you. I'll be the first to tell you that. I'll say that doesn't, it's no different than somebody calls you like, hey, I want to buy a house and then I want to sell it next year. That doesn't make that very rarely does that make sense. This is more of a long-term option, just like you call our financial planners. You want, they don't have anything that you put your money in today. They may, but for the most part, you're not giving them money today just to pull it out tomorrow, right? I mean, normally there's a plan. It's the same idea with this. But the thing I want to stress is all the negative stuff I see out there on this. It's kind of like when if I have a cough and I Google it, every time I'm dying of cancer. It's the weirdest thing, right? If you Google any type of ailment or disease, it's always ends in death, I find. It's the same thing with the reverse product. When you search it on Google, it's a lot of misinformation and garbage out there. The biggest thing, if you take one thing away from today, is that it's okay to ask questions and understand what it is. And if it fits you, great. If it doesn't, that's fine too, right? Just people fear what they don't know and understand. And that's what I find a lot in this space is people automatically think that they lose the home or this or that happens. And I normally kind of laugh a little bit like, yeah, none of that's true, but okay,
And it's okay to ask questions and learn more about something, like with anything.
Did you, yeah, that's fine.
What percentage of your home's equity can you get when you have a reverse mortgage
So
in general?
Well, that depends on three factors. The age of the youngest person on the loan, and if you're married, you're on the loan together. Whether, and if you are married and don't live together, which I've run into that more and more often, like two separate houses and everything else, there's a caveat for that. We take current interest rates and the value of the home. Those three factors together helps us determine. What we see right now with interest rates being near the highest, that, especially on the 10-year treasury and some other things we look at, you have to have more equity today in a house than what you would have had when interest rates were lower. But the one thing I can tell you, since I've been doing these since 2018, and even I know this, the cost of doing these have not changed. In 7 or 8 years, the cost of it, other than third-party fees that are beyond our control, has not changed, which is kind of remarkable because everything's got more expensive in the last 7 or 8 years. So.
Can you just give an overview of what it is and how it works?
So it's a loan, plain and simple. It's funny in our marketing material, we have to call it a reverse mortgage loan. So it's kind of like FedEx Express. It's kind of redundant in the title there. So it is a loan. It allows you to access the equity in the house. And what's different about a reverse mortgage than any other type of mortgage is that it's a collateral-based loan, whereas if I pull your credit after you have a reverse mortgage, it will not show up. The loan is on the house, not on the person, because the house will outlive the person. That's FHA's thought process behind it. And so it allows you to access that money. Now, you're not gonna get, 70 or 80%, of the value, to access there. They base it upon your age, and as we talk about interest rates, because with it being FHA backed, they give you some really cool features as part of it, but also if the loan ever goes upside down, so let's just say the number one cause we see of this, and especially in the real estate side, is people just stop taking care of their property. It just becomes dilapidated. And a lot of times it's just they can't keep up with it anymore, is really what it is. But if that ever happens, FHA pays that negative balance, no questions asked, whether it's your fault or the market's fault.
Is there a way to give us like a $400,000 house? Is that
Well,
too
I mean, I
hard
guess
an
the one we're
example?
closing, tomorrow is a
that's
good
a good
example. Is it where do we get that? Like 412?
Yeah.
It's a weird amount,
It
sometimes
is.
they throw
New
at us.
construction.
It's a new construction. about-
400,000.
Yeah, let's just say 400,000. This client's bringing in, and they're a little bit on the younger end, I believe. Sorry, I've got a lot
they're
of
in their-
numbers.
Yeah, they're in their 70s.
Early 70s, I
Yeah.
believe it is. I think they're gonna bring 220 down, and they'll, so they'll have a mortgage, let's say of 160,000 or whatever, whatever that
Let's
math
say
is. that'd be.
200,000.
Let's say
Let's
they'll have
just
a
do-
mortgage balance of
I'm
roughly
all
about
about
200,000, and they'll have several $100,000 in equity, and they'll now have to make a mortgage payment. Now, over time, that balance will increase, okay? This is what we call negative, but also what happens in that same amount of time, the house value should increase. So that's what FHA is doing. They want a gap there to make sure that it doesn't go this way. Now, if it does go this way, they cover it. But that's why we have to have so much equity in a property, is to make sure they don't want to start out like this, right? That's not a good thing. But they want that gap to be there and that equity. And so they just won't have to make a mortgage payment. If they want to, they can. It's just not a requirement.
So, okay, so this is kind of how I think about it, but sometimes I'm wrong. So if you have a $400,000 house and you've got 200,000 in equity in the house, instead of you paying the mortgage to start paying it down and having less equity, they're going to start kind of eating away at your equity a little bit, right? But you're hoping that the house price increases over time, like the $400,000 house in 5 years could be worth $425,000.
We'll put it this way: if in 5 years that house is still worth 400,000, then it's probably a good thing you didn't put more money in that house than you had to. Right? Nobody wants to own a house, buy it today for 400, and have it in 5 years be worth still 500 or 400,000.
Hopefully
So,
not.
and it isn't. Exactly. So that's why FHA knows the average appreciation of a home in the United States is around 4% if you go coast to coast. You look at a long average of it all. Our market's about 3.6, 3.7%, roughly in the Kansas City area. So they know every year that 400 is going to increase in value, and the balance is going to increase. So when I run these scenarios from age 62 or 65 all the way to age 99, at no point have I ever had the house go upside down on average appreciation. The only time I've ever seen them go upside down, and I have a lot of people call me when that happens, when they did reverses 20 years ago, is because the house was not maintained.
What about a home that just, I've lived there a long time, it's long paid off, it's a $400,000 home, and I have all the equity. Now why would I use a reverse mortgage? How does it work?
Well, it just, the reason people use it with paid off houses is just to, to have a safe way to get access to money for whatever life expenses may come up. Because when in retirement, you can use the money you have coming in, Social Security, pension, annuities, whatever your monthly payments are. You can use your investment accounts, IRAs, Roth IRAs, whatever, or now you have the home equity you can access. And the reason why clients would use the home equity is two reasons. One, they'll pay less taxes because you don't pay taxes on money you pull out of a reverse mortgage, where if you pull 20 or 30 out of an IRA, that could have serious implications depending on how you structure everything. And then two, what's really unique is, as everybody knows what a home equity line of credit is through a bank or have heard that term before, same idea, reverse mortgage has a line of credit within there, but what's different about the line of credit is that it actually has a growth rate. So let's say you have access to $100,000 today in the line of credit, and you don't touch it for 5 years because everything's going fine in retirement, right? Everything's going perfect. That 100,000 will increase. Your amount that you can access increases over time. So in 5 years, it may be 140 or 150,000. I'm just making up numbers there that you now have access to, where on day one, you only had access to 100. On a home equity line of credit, they give you access to 100. 5 years from now, you still have access to 100,000. And once the line of credit is set up, it's there for as long as you live in that house. Home equity lines of credit, the big difference is a bank can renew that, or they'll have renewal periods, and then they'll look at your income, and typically the later we get in life, typically our income is still the same as from day one, or is, that great amount they give us in Social Security, right? 1.5% or 1.9 or whatever they give you, and that doesn't keep up with the rate of inflation. So you could be 80, you could go and try to get your home equity line renewed, and they could say, nah, just pay us back. And they could shut off access. I find that quite a bit. So it's a safe, secure way you can access that equity without adding any risk into your overall monthly income or monthly payments that you're paying out.
And the difference between a HELOC or a home equity line, you're gonna have, let's say you borrow $50,000, you're gonna have to start paying that off, making payments on a monthly basis. But
So the person who does it can either have this lump sum and they can choose to take, I need 20,000 for this, or I need to pay my property taxes, or they can set up monthly, like I take monthly, or they can, and so they use it, they access that, what was available, and when they die or they move and they sell their home, then that is paid off at that point in time, and there's less equity for whatever happens there.
Yeah, I mean, whatever the balance is paid off, but when there's, what I always tell people, if you're using money from the reverse and you needed that money, where did you not pull that money from? So if you used 50,000 from the reverse, but you kept 50,000 in an investment account, I would always say use money from the house first and leave as much money in investments for as long as you can, because the investment account's gonna have a much better rate of return than your house is. Because with an investment account, even when the market's down, you can reallocate, you can do different things to help protect that value. If you don't know if you're gonna die in a 2008 housing market or a 2021 housing market, right? That's the two extremes that we have seen over the years. And so you can't really control what your neighborhood does or what the housing economy does. And to a certain extent, you can't control your investment accounts, but you can always reallocate. You can always go in there and redo things and at least make it to where you minimize your losses there, you have some control. I have a lot of fun with it.
Yeah.
So, I teach this as CE to realtors, and I could go on and on, on it. The biggest thing, like I said at the beginning, is that
we won't let him go.
no, I
He's
don't.
done.
Education is key, and understanding what it is, and don't just, when people hear the name, you don't just dismiss it, right? There's a lot of stories over time when people hear something, they automatically dismiss it just because a friend told them to. And I think we all run into the industries of saying, it's the same thing when somebody tells me hospice, and people always, oh, that means someone's dying. Well, no, not necessarily. Hospice is a really wonderful tool that provides so much benefit. But if you ask the average person what hospice is, oh, they're dying. And it's so much more than that, on that. And it's the same thing with this product too. People think the negative on it, but most of my clients that do this have houses that are well over $500,000 and over $1 million in net worth. So it's not a desperation thing. I mean, you see
It's a tool.
It's
It's
a
another
tool.
tool that you
I'm just not Tom Selleck, I'm sorry, you know, I wish I was, and you see Tom Selleck all the time, but he's, as I said, it's just, I'm not him.
Yeah. I thought you were.
I-
Then when you walked in, I'm like,
I know.
shit, Tom
See,
Selleck's
I
here.
mean, I'm telling you, Tom Selleck actually shaves that mustache every morning, and it's back by lunch. That's how much a man's man Tom Selleck is.
That's the new criteria.
That's a new criteria. I can't grow, it'd take 30 years to grow that type of mustache.
All right, so Christina.
Yes.
I wanna ask you some questions.
Okay.
So, what he offers is a tool that you could help people with. What are some of the misconceptions that you see out, you're meeting with people all the time about kind of their home or financing or doing, what are some of those things that you see that you're like, that's not quite right? Like he was saying, like we think hospice is one thing, but it's not quite like that.
Yeah.
What are some things that you see out there that you notice people are?
Financially or just overall,
Well,
in general?
start financially if you have one of those, and then just in general, because you also do healthcare stuff, you help people with that, legal services, those kind of things.
Well, I will say that I had no idea about reverse mortgages up until our little meet and greet. I mean, really and truly, because there is such a stigma out there, and doing this as long as I've done this, I was very uneducated. So thank you very much for that, because I really and truly didn't know all the ways. And this is a perfect example of why we let the experts do their expert stuff. Because again, like I'm not gonna talk about that. I'm not gonna talk about, selling homes. I'm not gonna talk about, your financial investments. Now, we can talk, globally, but we're also not financial advisors. So we always say, again, educate yourself. We will come with you. We will hold your hands, and we will come with you to talk with people and make sure, because there are bad actors in the field that can really ruin the reputation of even in our industry. Has anybody seen that movie I Care a Lot?
Oh, yes.
Oh yes.
Oh,
See?
yes, you all need to see that movie.
I will tell you, yes, but also we're not them, so please also please know that. But there are bad actors.
You need to
So
see it,
tell them what that movie
Yeah,
is.
so I Care a Lot is really just about a really terrible woman who acts as a guardian, conservator, really does some of the same things in theory, but has really a lot of people in her back pocket that are manipulating the system so she can just financially wipe older people out of their finances and stick them in a home. And again, there are examples of people, a lot of times family members, that are doing really terrible things. And so when people hear what we do, talk about kind of misconceptions, when people hear, oh, well, you're gonna just completely take control over everything. The minute they hear power of attorney, they think I've lost all of my rights. And that's really, it is not true. When you talk about estate planning and elder law attorneys and that, again, we have such incredible resources of folks and attorneys that we work with that can make sure that your documents say exactly what you want to have happen to you long term. They don't necessarily have to be enacted right now. A lot of them have terminology in there where 2 doctors have to deem you incapacitated in order for that document to have any control.
Is that
Yes.
for like power of attorney, like that's,
Correct.
because
Yes.
when you say power of
Yep.
attorney, that would
Yes.
make me nervous too, but it's.
Of course.
Yeah,
Yep.
so
Yep.
that's kind of a safe, what do you call it, like a safe stop or
It is.
safeguard that
Yeah.
helps so that they're not taken advantage of?
Correct, absolutely, because here's the other thing is, if you lack capacity, and I won't get into like the weeds there, but if you lack capacity, then you have to do a guardianship or a conservatorship. A power of attorney will stop that from happening. So you are choosing the person that you want to be your power of attorney, and those are things that you do ahead of time. You don't wait, you do them ahead of time. You go and you see, and you can do them, I mean, you can go online and do them if you don't have the funds to pay for an estate planning attorney, or you could do a reverse mortgage and then pay for your estate planning needs. I mean, that is probably one of the really important things that I would say, have your documents in place. Make sure that you have the people that you want named, because there are a lot of the misconceptions about, oh, well, they're the power of attorney, so they can just make decisions and put me in a home and take all my money. It happens. I will say, sometimes it does happen. And we get involved a lot of times because family members or a neighbor or someone that has been trusted is named on the document, and they have been able to kind of manipulate that. So again, I always say, talk to the experts, talk to the people that know what they're doing, financial advisors, estate planning attorneys, people that know what they're doing. Medicare advisors, another one. You know, don't just pick up the phone when somebody calls you. You see it on the TV. I've had clients do it all the time. 1-800 something, and they call and they say, I'm gonna sign up for this Medicare Advantage plan. And that's a whole talk for another day. It is,
That's for September.
Okay, perfect, absolute, wonderful. But we had to do a cease and desist letter for a client because this particular Medicare advisor was coming to her home every week and knocking on her door and trying to get her to sign up with a new insurance company. And she would call me and say, talk to my power of attorney, which was awesome. I loved it. She'd give them my number, and of course they would never call because they were predatory. They were trying to push her into a product that didn't make sense for her. And so we have, again, we're a resource to a resource. Even if you just call me, there's no fee to it. Call me and I'll give you a whole list of people that we work with that have been vetted, that they're insured and trusted, and we know that they've worked with our clients and they've taken care of our people. So.
And that's part of what this whole education series is, the Senior Truth series, is to give you those resources that we trust, that we know, that are willing to come and talk. The people who are predators or whatever, they're not out there coming to seminars and they're not meeting with other people. And, we have a whole network of people. So they're people we trust, and that's kind of how your resources are as well. Like, I think it's important to get a couple recommendations. You know what I'm saying? For anything that you're going to do, whether you come here and you talk to somebody, or they talk, Kathy gives you a name, or Lee gives you a name, or Christina gives you a name. You want to, don't just trust the very first person, I don't think, that's advertising out there. That's my recommendation for a lot of things. It's just, you gotta kind of do your due diligence, and it takes more time, and it's sometimes a nuisance, but it's worth it in the long run. You're gonna save yourself some headache, I think. And then there's sometimes where even somebody who's recommended doesn't work out, or it doesn't always happen exactly the way we want it, unfortunately. But so, like, what types of resources do you have that you kind of, if someone called up, if they wanted to ask you a question, like, what, they don't have this piece of paper like I do, but we could hand it out to them. Harrison, where are you?
So people that we work closely with, Kathy and senior helpers, of course. So, but again, even Kathy knows, we try and match personalities if we know the person. So senior helpers may be one of, 2 or one of 3 that we recommend, just because we want to make sure that, and a lot of times I'll sit in on interviews because I love Kathy and I love senior helpers, but there may be something that, doesn't click with that client.
I paid her today.
Yeah. And so, estate planning attorneys, we have a whole reference list of different estate planning attorneys, because again, it's not a one size fits all. Estate planning attorneys, they do documents, but sometimes they specialize in different things, or sometimes they just have a kind of a softer approach. If it's a super complex issue, and it's not just straightforward documents, I want to name my son, my daughter, and my niece. If it's convoluted, I know the estate planning attorneys that kind of sit down and hold your hand a little bit more and have maybe just a warmer approach. Financially, we try and gauge, again, I don't try and keep up with all of their pricing, but I do kind of know where they are in the continuum. So I may say, hey, try this one first because the pricing might, Medicare advisors, DME companies, durable medical equipment companies, home health, hospice. We talk a lot about hospice. I love hospice. I think hospice is such a wonderful benefit. And again, it's not a one size fits all. I've only met a handful of hospice companies that I've been on the fence, and not here. Kansas City Metro has like amazing hospice companies. But again, they may do something different. They may have pet therapy where that's something huge because the client just had to, you know, get rid of their dog because of the care that it was requiring. So pet therapy might be like a huge benefit. And so I'm gonna kind of tunnel you to the hospice companies that I know have pet therapy, or some have chiropractic care. Some, you know, I mean, we just have such a great industry here, senior industry of just really wonderful resources. And if I don't have the answer, I sure as well will call all of the care partners and say, hey, I need this resource. But really, when you think of anything, home health, private duty, hospice, even hospital systems, I mean, those are definitely not all created equal. So if you have your choice, and most people are pretty deep rooted in their hospital systems, they're like, I doctor at KU, or I doctor, you know, at St. Luke's. And so usually by the time people come to us, they're already pretty much in the system. But it never hurts to get a second opinion or a second recommendation.
And we are gonna have a talk on some hospice stuff, cause that's a whole nother animal and a whole nother category that I don't totally understand. I didn't, for the longest time, I thought that was there was one thing, there was hospice, but it's not. It's a whole thing. And I love, and I didn't learn this till more the last few years either, is that just because you're in hospice doesn't mean that you're at the end of life. Sometimes you're just, I don't even know the right terminology.
Well, one of the gals I know really well talks that they want to graduate people out of hospice.
Yes.
Okay, yeah.
And I really like, when she said that, to a dear friend of mine, I love her to death, and she has such, like you're saying, we have such great hospice companies here. But
Yeah.
she talks about it all the time, we want to graduate them out of here. That's what we're here to do. And if not, we are here to hold their hand all the way through it. So I thought that was a really good term.
And this is one of those things where you get a recommendation for someone for hospice, but there are so many to choose from. That's a tough thing too, and I don't even know how you select that unless you have somebody recommending it or you get a couple recommendations. So we'll have another seminar on that, because that can be kind of its own little topic. I think you guys probably all have much more knowledge about it than I do. As I always say, I'm just here to bring in the experts. I'm definitely not the expert, but I have learned a lot. Every single seminar, I learned something that I can use, and so now I'm one of those people that has a lot of knowledge about a little bit about a lot of things, and so I'm dangerous. Now I'm just dangerous out there.
I have a question. Can you recommend like retirement communities and how they're rated, that sort of thing?
Yeah, Medicare.gov is a really good resource, but yes, and again, it's not a one size fits all. It depends on amenities and things like that. I work with a lot of senior advisors that do placement, that know the ins and outs of a lot of communities. So a lot of times if somebody's like, hey, can you tell me, you know, the top 3? Sometimes I'll use those senior advisors as, you know, my education to say, okay, what are we looking at? Because things that I look at least when I was running, is how long has their management been there? Because high turnover, high turnover is gonna happen. It's a high stress, high burnout industry, unfortunately. But for me, I look at management, and if it's constantly turning over, then typically that's a sign of their corporate team maybe not having, you know, my mom used to say it, they're poop in a group.
Ducks in a row?
Ducks in a row, poop in a group, yes. And so, yeah, from independent living all the way to memory care, skilled nursing. And I really try, when I recommend places, I always recommend places that I have physically been and that my clients have been. I will also say, hey, full disclosure, I've heard great things about this community, but I've never taken care of anybody there. But we'll recommend a lot of really great senior advisors. And again, if you want a full-fledged menu of activities with, you know, pickleball and all those kinds of things, then, you know, we're gonna steer you towards a community that has all those activities. If what's important to you is you can have your dog, again, we're gonna steer you towards a community that you can have pets. And so it really is customized to look, and that's what senior advisors do, is they will make a list of all of those preferences, and then again, cost, we keep in, of course, that's one of the biggest things. Location, what I have learned, so I'm a transplant, I've been here 6 years, everybody is very location specific here. Like, some will say, absolutely, we will not go north of the river. I'm like, okay, I know, you know, whatever. But I moved here from Omaha too, and so everybody in Omaha is the same way. I'm not going out west. Okay, then that's fine. Then we will focus towards, so, you know, cost, location, and amenities are usually the top 3 that you look for. But yeah, if you want recommendations or have questions, I'm happy to chat with you. You're welcome.
And just real quick on that, there are people who will help place in placement for, you know, that's their job to help find different communities that work for you. Some get paid through the communities. If they place somebody at Garden Villas, they'll get a fee for that, you know, Garden Villas will pay them. And then some you pay directly, self-pay. So you have to choose which one works best for you. You know, sometimes, you know, there's, I don't know. So we can talk, we can,
Yeah.
there are biases on that, and we're gonna, that's something we're talking about in August, so those are all coming up.
Look at that, that's right, yeah, that's a good one to go to for sure, yeah, senior advisors are wonderful, because again, that is their sole job, and they know the ins and outs, and they know, whereas I can't keep up with all the moving and shaking that happens in those communities. Yeah.
Well, let's talk about some questions. Does anybody have some questions on the services? Anybody, Lee is going to be your residential expert on anything to do, he does forward and reverse loans, but if you're thinking about keeping your home or, you know, pulling out equity or any of that kind of stuff, any questions about that, or do you guys have anything more clarity? No? Okay, anything for, go ahead.
When are situations, Lee, that you find that the reverse mortgage is a really good solution, and when are times when it's not a really good solution?
So the easy is when it's not. You know, so for me, it's if someone's planning to move in the short term. You know, and I've only, you know, I've done a lot, I've been very blessed, I've done a lot of these. I'm very competitive in nature. I coach everything my kid does, so I'm always, like, we were at a baseball game till like almost 11 last night. By the time I got home, we won, but it was stressing me out last night a little bit. But so I love, you know, I watch numbers and track everything on that aspect. But the biggest key on you know, is just what are we going to do, and it comes down to. So I'll use this as an example. So if one of you call me and say, hey, I want a reverse mortgage, my first question back to you is, why do you want one? You know, like I wanted you to tell me why you want one, because short term, it's very hard to justify, right? Just because it has a set of costs to it, and that has to be accounted for everything you do with it. And I think I've only had one person do a reverse where they sold it in the first year. But that was the plan, gave them the option. They took a couple months, they came back to me and said, we feel like this is our best option. Then I went over it again with them to say, this is what it's going to cost, and this is what we're gonna look. They're like, we understand, this is the option we're gonna do. Okay, cool, everyone's on the same page, I've got no problems. And I think that one of the sons was a financial planner, so they were all fully aware of that. But really, if you're gonna be in that house more than a couple years, to me, it's almost, you know, there's a guy who has a PhD, which I can barely spell that, so I'm assuming he's a pretty smart guy. But he does a lot of he studies financial income, or how you can have sustainable income throughout retirement. His name's Dr. Wade Pfau. If you've seen Ferris Bueller's Day Off, you know, Ben Stein, you know, in that, where we have Bueller, you know, very dry, that is Dr. Pfau, to the T. Brilliant, but man, he will put you to sleep pretty quick when he starts talking, you know. But he talks a lot about how 90% of the people that are over the age of 62 should be looking at a reverse mortgage as part of the retirement plan. And I said a very key thing there. Should look at it to be part of it. I didn't say 90% of people should have one, but 90% of people should be looking at it, because it's a safe, efficient way to use that equity that's not adding any risk. It is a loan, and everybody associates loans with risk. And when you add risk into anything, you know, if you have a car loan and you don't make that car payment, you're gonna lose that car. Same thing with a house or any other asset. This is one product that was designed for people over the age of 62, that you can access that and not make a payment to it and have everything covered on the back end in case a worst case scenario were to happen. You're not at risk, your estate's not at risk, nobody's at risk. And we talk a lot, she mentioned finance or estate planning. That's a lot of times my first question, because what happens at the end of a reverse mortgage depends on whatever your estate plan dictates. If you have no estate plan, these are a pain to deal with in the end. But I would say everything's a pain to deal with if you have no estate plan. But if you have an estate plan that says Johnny and Susie gets my house upon death, Johnny and Susie can get the house, and all the the reverse mortgage is gonna ask, what are you gonna do, sell or keep the house? We know what I almost gonna say 99% of the time, the heirs are gonna sell that house. So they sell the house, the balance is paid off, the equity is dispersed out to the estate. I would say Johnny and Susie, if that's how it's written, there's no deviation from that. It's very black and white what it is. And I preach to people, whether you do a reverse or not, have the estate plan done. Because if you wanna leave a blessing to your next of kin, have the flippin' estate plan done. Because I've seen it on my family side, where it's a complete disaster, where people don't talk to each other anymore. And it's absolutely heartbreaking to see that my mother-in-law and her sister do not talk anymore. It's not because of my mother-in-law, it was all over $30,000 too. And she wants to write her a $30,000 check now, and maybe she'll get her sister back. And I said, it's not about that. Don't do that. And it's because the estate plan was not clear, concise, and set up.
Are there any tax ramifications?
No. So any money pulled from a reverse mortgage is not taxable because it's considered borrowed funds, much like a home equity line of credit. So if you pulled out $50,000, $100,000, you're not gonna get a 1099 for it. And people that may have the Medicaid thing down the road, any funds that are sitting in a line of credit or a reverse mortgage are not considered liquid assets. So if you had $100,000 sitting in a reverse mortgage line of credit and you're trying to do the spend down, you don't have to go spend money from that line of credit. Now, I'd always say go consult a Medicaid attorney. That's not my thing, but I do know any money in the line of credit is not liquid assets. Now, if you pulled that money out and put it in your checking account, different story. But if you had money just sitting there, and I've had clients that know in the next 5 years that may come up, they're planning for that aspect, right? They're looking ahead. They're utilizing this as a safeguard to still have some money set aside and not have to go buy a new car, right? I mean, how many times do people have to buy a new car in order just to qualify? They don't have, they can structure things around that.
All right. I had something really smart to say a minute ago. I forgot, I didn't write it down. Yes.
It might be a different kind of question. I was just kind of wondering if you could give guidance on if you're planning to remain in a home for the next, say, 3 to 5 years, how do you what questions should you ask yourself as far as like, do I invest $50,000 in new windows? That kind of, or siding, somebody said, oh, don't do anything to it. It's just like, but yeah, I don't know, just what are valid questions to make that decision?
That's something that's very specific to a neighborhood, and as well as some people's view on what needs new windows and what doesn't, is different. So I may look at it and be like, oh, that's not a big deal. Or somebody else may look at it and say it's not a big deal, but I'm like, well, you really need the front that needs new windows or something like that. So it just kind of depends, again, on how long you're gonna be there and what shape it's in. It's hard to say. There's a list of important things that are important to have done, that where you generally get your equity back. Like maybe windows is one of those things that generally kind of comes back to exterior type things. Sometimes a bathroom remodel, you're just not gonna get that money back, or, it'll take some time, or basement remodel. So it's really kind of individual. Kitchen, sometimes you can update that. Paint is always one so there's a few things that I would suggest.
I can see the difference in personal style. I was just thinking of the major things like siding and windows, so that's different.
It kind of depends how bad it is, yeah.
And I think it depends if you get enjoyment out of it too.
If you're gonna be there for a while.
Yeah, if you're gonna be there for a little bit, or you just, if it makes your life easier, by doing something, by also, if it makes it easier that you redo the stairs in the front of the house so you can get in easier, right? Or that stuff is great. I would never tell somebody, and I think Julie, I know her and I both agreed, don't go put in all brand new windows and then want to list the house 6 months later. Right. That's when you would call Julie ahead of time, say, hey, will you come in? What do you think I need to do here? We're gonna sell them the next year. Then she could say, yeah, the money's spent well here, but if you're gonna be there 3 to 5 years and you're like, it gets really drafty in the wintertime, I can feel the cold air coming through the windows, then that may be a great thing, cause you're gonna get a benefit, you're gonna get enjoyment out of it, and that's a great way to, you know, to do it, but I'm not a big fan of doing things for the next person. You know, if you're gonna sell that, don't do it, you know, oh, this next person will enjoy, well, you're never gonna see any of that, you know, and you may not have to do it, let the next person incur that expense.
And sometimes you do it not like they would like it to be done, you know, people
Yeah.
wanna replace carpet all the time,
Or paint a wall, or.
you know, now black windows are in, you know, do you do the black windows, do you do the white windows, do you do the double, you know, somebody else might like to just put the 189 windows in, so some of those kind of things, it's all very individual. Yeah.
Besides you, Julie, if you're looking to list your house, I'm talking of a family in another state right now. How many real estate agents should you talk to, possibly to interview, and what should you look for?
It doesn't matter, only Julie.
Well, that's how I started, yeah, exactly. But above and beyond, what should you look for in a real estate agent?
In a real estate agent, I think you need to have that personal relationship, and then also, you know, I always think somebody that's been referred from somebody else is also, I mean, that's how most of my business is somebody else referring them. They know how I work, they know me as a, you know, as a person, that I'm not just there to take advantage of them. And then I think, you know, have they been in the business, not that a new person is not, you know, but, you know, have they been doing this for a little while? I think some experience is helpful, or, you know, do you like somebody who's from that area? Do you know, like, I do sell in Missouri, I've sold in Green Valley, but that's probably not my best area, you know, more Johnson County or around these areas are probably my stronger areas. I live here, I know this area, so those kind of things, you know, if somebody that's even in the neighborhood is also a great person because they know good stats and things like that. But I think those kind of things are good. All right, let me tell you a little bit about next month's. Do you guys have any other questions? I don't wanna.
Well,
Yes, sorry, go ahead.
Christine, how do we get hold of you?
Yeah, so my business cards are in the back,
Okay.
and that is the main business line that I have on me 24/7. So you can call me whenever you want, preferably not at 3 a.m.
I was gonna ask you that.
But you know what? We do pride ourselves. We are on call 24/7. So I had to laugh a couple of weeks ago. I had a client call me because she was out of mouthwash, and it was at 5:22 in the morning. And bless her little heart, she needed mouthwash, and it was very important. So she was like, "Thank you for being there," and I was like, "You're welcome." Yeah.
I'll never do that.
It's okay. My business cards are in the back.
Thank you.
You're welcome.
Is there a minimum, can you buy a house and live in it for a short period of time and take out a reverse mortgage on it?
Yeah.
Is there?
You can, I mean, it just comes back into, does that make sense? For what the cost is, cause you know, that's the way I look at everything, is what you're gonna spend in the cost of setting it up and getting it done, and for the time the duration you're gonna be there, it doesn't make sense, and doesn't, you know, I'm a numbers nerd, so I like to say, is this gonna break even? You know, or where is that at? And a lot of times that's why I'll walk you through and just say, okay, yeah, this doesn't make much sense, or, okay, I can see where the numbers start to plan out a little bit better.
So I heard it a little differently than he answered it, and so I'm not sure which way. So let's say you live in a 2-story house and you need to go buy a house that's a ranch. You when you buy that new house, you don't have to live there for 2 years before you get a mortgage. You can just buy that house with a reverse mortgage. Does that make sense? So
Yeah, you could sell your house.
sell
with
your
your
house
story.
and buy the new one with a reverse mortgage. You don't have to wait 2 years. So I'm not sure which side your question was on, but.
I've
A little
lived
bit
in
of
my house for over 30 years.
Yeah, okay.
I hate it, I wanna move.
Yeah. So you can use-
It'd be nice to upgrade them.
Yeah, so you
That's
could,
what I was
that's kind of
thinking,
what
or-
the clients that are closing tomorrow, they're buying a brand new house, using a reverse mortgage to do that. You know, they had some equity in their other house, so that's what they're doing. You don't have to wait. But now, if you are gonna be in your house for 2 years or more, then you don't have to pay the long-term capital gain. So that's one where 2 years comes in sometimes, like you have to be there, if you sell it in a year after you just bought it, you're gonna pay long-term capital gains. Higher tax.
And I have cards in the back. I also have Royals magnet schedules. Please take them, because I've already paid for them. And, you know, I think they lost last night, so they're gonna continue winning, so just take a schedule, throw it on your fridge. or whatever, so please take them, because otherwise they're just gonna get thrown away here in a couple months. So that's always my thing, just feel free to have that.
Tell them about what this is here real quick.
Yeah, so our wonderful owner, Marsha Corbett, is a paralegal, and she has this really awesome estate planning workbook. And again, it's a really just nice way to organize your thoughts. If you have not done your estate planning yet, it can be very daunting. I mean, I hear it all the time, because part of how we get involved with folks is through their estate planning attorney. If they go and they say, I don't have anybody to name on my documents, or I don't trust my kiddos, which unfortunately does happen more than I would like it to happen. But this can be kind of a guide ahead of time. And of course, attorneys have these wonderful things too, but before you even engage with an attorney, you can kind of just put your thoughts down and jot your assets down, your beneficiaries, your personal property, and it just makes that person who you have named to do all of your things, it makes it a lot easier for them. And then you're just really organized. Your attorney will love you if you come in with something like this, because a lot of times what stalls the estate planning process is not knowing what you want. So having them, there's just really good thinking pieces. Do you have a safety deposit box? Again, your asset organizers. I've done one of these. I mean, I haven't done my full estate planning yet, but powers of attorney. I have a little kiddo, so I've named guardians, but just having, God forbid if something happens, none of us are immortal, right? I could get hit by a bus tomorrow. I need the people closest to me to know usernames and passwords of how to get into my accounts, where my, my life insurance policy is, all of those types of things. So this is just a really good guide. There's a ton in the back. I brought 30, so please, please, please take one.
Christina,
Yes.
have you heard that when you have a safety deposit box, it's very hard for the people to get this stuff out of the bank?
Your power of attorney, yes, it is very difficult. Like you individually owning it, I haven't heard that. But I will say, as power of attorney, most banks have additional hoops that you have to jump through. And so I always just say that it's not good enough just to tell your power of attorney or your trustee where your safety deposit box is. We always go in as agents and say, hey, we need to fill out the form that your bank has specifically, because the bank always has their own form to go in to fill out to approve you as the power of attorney. So, yeah. But a lot of people are getting away with safety deposit boxes, to be honest, and they're doing
Well,
their.
it'd be awful to put your stuff in a safety deposit box, and then your people, even though you've got it as a,
Yep.
Request, that
Yes.
they get it. I've heard that it's very hard to get them
Well,
out.
sometimes when it rolls through, it has to go through probate. If you just have a will, a judge can
Of course.
actually issue an order to
Yeah.
a bank to say, you can
Yeah.
go in there and retrieve, if the will, let's say if the
Yeah.
will's in there,
Yeah.
or the estate plan, the judge can issue something saying to the bank, they can pull these items out, but they can't pull
Yeah.
anything else out.
Yeah.
So if they have jewelry or anything else, that would all have to stay, but they can pull the estate plan out to verify, that way, everything can start. So but it can be very, most banks are actually not even doing safe deposit boxes
Yes.
anymore because there's too much liability on them.
Yeah.
And, if something happens, it's becoming a whole thing. Banks in general are just getting smaller and smaller because less and less people are going in. And since now also pretty much any money you receive in retirement is now, for the most part, all direct deposited. I've even seen my bank I use in Lee Summit go, you used to have 7 to 7 hours, now they're 8 to 5. And I'm sure what they did is they looked at the transactions and realized that people aren't coming in between these hours, so they, shorten those hours. So I agree, having a fireproof lockbox at home's fine. Have one at your attorney's office. Get one of these filled out, because that's awesome, that where people know, or tell your next of kin where everything is. It's not a secret. You're gonna die, as I tell you, you're gonna die, you're gonna give everything away with a warm hand or a cold, which isn't. Have the conversation beforehand. That way when it happens, and especially if it's all written down right here, that just makes life so much simpler.
If you don't have experience with an attorney, what should you reasonably expect a life estate plan to cost you to have it prepared? And it depends on what your assets are, but is there a parameter of like?
It depends, and a lot of estate planning attorneys will give you kind of a discount for a package, right? So if you go in there and you have no estate planning documents and you're doing all of the the healthcare powers, if you're doing a trust, if you're doing a pour over will, if you're doing all of those things, I mean, again, I'm gonna give you a big range because
That's okay,
yeah,
I have
$5
no
to
range now.
$12,000-$14,000 and everywhere in between.
Yeah.
Yes, I
There's-
mean, it literally, I'm really cautious, but again, you know, it's gonna also depend on how many documents you're doing. Are you doing Medicaid planning? Because that's gonna be even more if you're doing Medicaid planning. So, and a lot of times if you call ask them, is it gonna cost me something to sit down with you and get an idea? Most of the time, it's gonna be a fee to sit down to even schedule an appointment.
And that's okay, because all they have to
Yes.
charge is their time.
Exactly.
And that's why, you know,
Yes.
anybody in this room could recommend an attorney that we know. It's kind of funny when we get in these spaces, we all know who to recommend and who not to recommend. And we never talk bad on anybody, but we have a
Correct.
pretty good idea of
Yeah.
like, hey, if you're looking for this person's a great person. But my father's done 40 years of law in Southwest Missouri, and I can attest, it can be anywhere. I mean, you could really do stuff as cheap as a couple $100 maybe, depending on what your exact case is. But several thousand, you know, you're gonna probably be out the door several $1,000s, if not all the way up, and it all depends on the complexity of what you have, how many assets you have, and whatnot. But the key is at least to start making some calls and have those conversations and get that wheel in motion, and then you may be surprised, maybe it's only a couple $1,000 and you're good, or maybe it's $200. You know, you just don't know on any of that.
I think I'd
until-
be worried if it was only 2.
Well, and that's the thing, go ahead.
I'd say you want somebody who's going to give you a fixed fee for a fixed amount of services, as opposed to somebody who's gonna charge you per hour. Because this
Oh,
type
yeah.
of work is generally billed as a fixed fee, and so you know what that cost is going in.
Okay.
As opposed to every single time you call, they're charging you again. That's what I would say.
Yeah.
Find someone who's going to give you a fixed fee up front for a set amount of services.
Yeah, and that's typically what I see with estate planning is there's like a package of, now you can do documents printed on, you can do LegalZoom, you can do that. Now I will say, don't recommend it, but if you have nothing, that is better than having absolutely nothing, right? So if right now, that's all you can do is have a power of attorney, again, you can have somebody do them for $250, $300 a document. If you have nothing, do something. Something. And then maybe down the road when things get a little bit more complex, then you can visit, yes, an estate planning attorney.
You mentioned the pour over will. What is a pour over will?
Ooh, I'm not gonna get into the nitty gritty, that's an estate planning attorney, but there's a difference between a will and a pour over will, and it depends on if you have a trust or not a trust. So, yeah.
You also mentioned the fact if you have plans for a Medicaid, that would cost more. What is that you're referring to?
Just Medicaid planning. If you know that you're gonna run out of funds and you're gonna potentially need to be in a nursing home, there are elder law attorneys that will help you plan for Medicaid.
Medicaid, not Medicare.
Yeah. Right, yeah.
Yeah, and then they'll specialize. A lot of times you can ask them, say, hey, do you do Medicaid planning? Some of them will actually tell you, no, we don't do
Yeah,
that.
yeah.
And it's good to know if you think you're gonna need that.
Yes.
If they say, yes, we can do that as well, then great, then you can plan that out. Hopefully you don't need it, right? But it's you rather have a plan and not have to use it than need it and not have anything set up.
So 2 months ago, we had 2 attorneys, right? We had Maureen Lester and we had Mike Fisher, yeah. So those are 2 that, you know, they've used in.
I've worked with
You've
Maureen on
worked
some
with both.
stuff
Yeah.
before too. so
Yeah, she's cheat estate and probate, those are a couple good names. And on that note, I've started to record the seminars and I'm getting them up onto YouTube. They're kind of rough footage, but I'm working on that. And so if you can't come 1 month, or you have a friend that can't come 1 month and you want them to hear that information, we're gonna get that up onto you. It's up there now, it's just kind of rough. But they can fast forward stuff they don't wanna hear, right? And then also on the website, I'm kind of starting a section of have a blog that will be able to kind of recap what we talked about a little bit, and then also have the video on there. So trying to make it more accessible to people who aren't able to join us in person, which happens quite a bit, so.
Julie, is it on the Senior Truth Series?
That's where the blog is, yes.
Okay.
And then there is a link on the website that goes to YouTube. You know how you can push it goes to Facebook or YouTube or anything like that. So, and I it's also on the emails I send out at the bottom, you can go to YouTube there. I think it's Julie Spaulding Real Estate is the YouTube channel, but, if you put in Julie Spaulding, you probably can find it. Okay, we are going to draw for, so two things, if you're new, make sure you fill out your evaluation, and, so I can give you your gift card. You can do Target or Walgreens, those are my two choices, and if you brought a friend that's new, then make sure you write yourself down, so you can get a gift card as well. Next month will be in one of the bigger rooms, and it will be on downsizing, simplifying, right sizing. Have somebody, actually my two panelists are here, so I will be a panelist. Cooper Rowe with New Leaf will be one of the panelists, and it's spelled differently, so I'm going, she is an organizer and simplifies, helps people organize and get stuff done, so she will also be one of our panelists. So we're gonna talk about some ways to do that. He said the best thing you can do for your family is to have a trust. I think the best thing for your family you could do is get rid of some stuff. That's what I'm thinking. I've been in a lot of houses where I'm like, wow, that's a bummer, cause I'm like, I'm a real estate agent, I'm like, oh, bad, I'll see you in a couple months when you've been through everything, so.
I'm in a state sale.
Yes, exactly, I do know some good people like that. Okay, last week we did it, last month we did it a little different, I'm just gonna draw out of here. So Kathy, come up, she is, one of our education partners, and I do have to apologize, but I am getting a new banner. We also have the Alzheimer's Association is one of our new education partners, and they're amazing. So Valerie is in the back. If you have any questions for her, she is happy to answer you those questions for you. So tell us a little bit about, do you want to tell us about Senior Helper?
Sure. I mean, Christina already did it for me, but.
You guys know that.
I know, you guys already know my spiel, but, so I'm with Senior Helpers, and we do private duty, caregiving services in the home. So, we love to keep people in their home as long as possible, and we have a lot of tricks up our sleeve to make that happen, but should the time come and you do need to, move into a facility or you choose to do that, we can go with you. So we're there to give you that one-on-one care that you need every day, whether it be, taking a shower, getting dressed, running errands. A lot of people have to give up their cars with, eyesight issues, things like that. Making sure you take your medications, really anything that's non-medical, helping you make sure your bills are paid. I almost like to say it's like having an assistant that maybe gives you a shower once in a while. So anyway, I know that's kind of weird, but it's true. It's true. I mean, and we do just about everything, like housekeeping, grocery shopping, meal planning, all the things. So anyway, I brought a basket today based on the topic. I've got just a lot of random little things for your home, your kitchen, and then for those late night cravings, some Godiva chocolate. Oh, and a gift card to, you can go to TJ Maxx, Marshalls, Home Goods, but don't lose that. It's attached right there.
Okay, I'm gonna pick that. And if you have questions about our other education partners, those are also, there's information online too, and information here, so, okay.
It is kind of heavy, so if you need help getting it to your car, let me know. Julie Perez. Oh.
All right. Okay, next month, it's the 23rd of July, and then August, and got the rest of the year going. So anyway, thank you so much for being here. I appreciate it. Appreciate your questions. Yes, sir.
Just quickly, I want to give a shout out to Christina and Advocates. I am a client of theirs.
Oh, fantastic.
And without going into a lot of detail, I put a lot of trust in them with what I entrusted them with to do. And my number one criteria in selecting someone to do this was someone I trust.
Yeah.
They're
Yeah.
great people to work with.
So, thank you. We love you. Make me cry.
One last thing, I cannot stress you enough how much you need to watch that movie.
Yes.
I care a lot.
Yeah.
Yes, it's on Netflix, yes.
And it will make sense of everything that you are trying to do here.
Oh, I see that. Yeah. Yes. Maybe we should say, we are not, I care a lot.
So you can come up, we
It's amazing, you know, with kids, or family members.
One of the things that we do, and I it's like when I'm here, so I have
Each month is a different calendar. And those are the topics on there too that I have. So each month is different.
I love how enthusiastic.
I think it's been very
Awesome to see you
I
guys.
mean, it's
So anyways, this is something where like that's very